and welcome back to our next lesson on China and the global economy. In this session we're going to be focusing on how China's growth model is intended and anticipated to move to a better quality level of growth. Now, the term that's commonly used, or two terms that are commonly used here, are the Great Rebalancing and China's new normal. Now, really, these two terms accept the notion that China is not just going to be focusing on the quantity of growth, but the quality of growth. Okay, let's take a look. Okay, so we focused on this point here just a moment ago. So our next point really is just about this notion of intensive growth. Now, intensive growth simply means generating more output for a given level of inputs. It's about increasing productivity. Okay, we've also seen within China's 5-year plan, they want to generate more innovation, and they really do want to focus on moving up the higher value added chain, so that they can offer better quality goods to global citizens as well as consumers within their own country. And further to that, it's about generating total factor productivity, so ensuring that they actually develop the quality of their factors of production, and yes, they better utilize them. In a nutshell, I think this is best summarized by the line that it's about inspiration when it comes to TFP, not perspiration. That's a nice way of thinking about it. Okay, so it's about innovation and generating supply side gains rather than simply working harder and more extensive growth, as we've seen China previously focused on. Okay, so how do they do this? Well, they want to improve and better utilize the factors of production. So that is absolutely key here. Okay, so they want to better educate their future workforce. They want to ensure that there is a good supply level of them, hence the reformed one-child policy. That the level of education is appropriate, and that they have low barriers to entry for new startup firms. So we also discussed within the 5-year plan the need for creating an entrepreneurial society. Okay, so those are important elements, but we also saw how China need to better utilize, for instance, their land, and to use that land more intensively to generate those cluster cities surrounding those super cities, which will enable cities to grow far larger, where we saw and heard that productivity is 50 to 80% higher than in smaller cities and smaller towns. Okay, so that's a clear example here as well. Okay, next point, we've got shifting investment towards consumption and from exports towards domestic demand. China's growth is still heavily reliant on capital investment, as we've seen. 2016, it was 47% of GDP. That's of course subject to those diminishing marginal returns. Okay, we know that the growth being generated from this model is going to slow. Okay, and further to that, your capital investments, as we've seen on the solo model, require maintenance and of course depreciating value. So it means that there's always the need to actually repair and upgrade and so on. Okay, right, so they need to focus on this consumption, and of course China has a large growing middle class consumer base, and they're hoping that that consumer base will help to fuel domestic demand. Now, further towards that, they're also hoping that the quality of the Chinese own produced brands and goods will be of sufficient quality to really appeal to this consumer group, but also when it comes to their exports, that their exports will be that much more higher value added. So they may be selling less in terms of the quantity, but the quality of those exports they hope to actually improve. We've also seen an increased focus on green development and developing innovation within that sector, something that China view as a real business opportunity. Okay, so those are important points in relation to that. Okay, just going back towards these points about better utilising factors of production for a second there, is the fact that we also heard that China want to better utilise their academic research that they're producing and improve the commercial ties of their universities to ensure that that helps to support innovation and TFP growth as well, of course, is another example of how they're hoping to generate this intensive or alternatively cutting edge growth. Okay, all right, so yeah, final point that I've just noted down here is that state-owned enterprise reform is underway, but yeah, Xi Jinping is generally seen as not a reformer, but more of a modernizer. And a lot of people are disappointed by the pace of reforms that has actually taken place. So what's clear under his tenure so far is that he is not going to be carrying out widespread privatizations of SOEs. That would concern him too much, in terms of giving state ownership or state-owned assets to the private sector, and him losing part of control, it seems. But a second point there is that actually he wants to be able to tap into those companies and have a Communist Party member who is active and engaged on the board, but at the same time he realises they need to be a little bit more dynamically efficient. So his proposed solution, it seems, is about one of mixed ownership. Mixed ownership, part private, part state-owned. It's going to be interesting to see how that develops, and we'll look at this in a little bit more detail in future lessons there. Okay, in a nutshell though, this process has generally been very, very slow. Remember, going back to the start of these lessons, we saw that China has adopted a gradualist approach to their economic transition from solely command-based to more of a mixed economy. And these processes are very, very slowly being implemented. Okay, so it's one thing saying them, so the actual policy rhetoric to actually put it out there and say you're going to do that and have it on your 5-year plan and so on, but it's another thing to actually get on and do it. Okay, so the pace of reforms isn't quick, and that is disappointing a lot of people. But what's also interesting about this is that when it comes to trying to generate innovation and total factor productivity, these are really difficult reforms to actually implement anyway. So it's a real challenge here. So it's going to be interesting to see how this all goes. But as we've said, the focus is now meant to be about the quality of growth and not the quantity, something we've seen within the solo model previously, that we've got to move towards more of a cutting edge level of growth and accept that growth is likely to slow. By 2020 they're expecting sort of 4 or 5% growth, okay, down from 6.7 at the moment. Okay, that's it for now. Please get in touch and put any questions out there if you've got some questions for me, all right?